Once fated for pandemic heroics, global's principal banks now face an uneasy crowd. Washington global central bankers, who shared the limelight for skirting a pandemic-driven melancholy with quick motion years ago, at the moment are stumbling through the aftermath as they try to quell an inflation surge none predicted or were capable of prevent. If their reaction to the economic crisis prompted through the pandemic regarded formidable and forward-looking, with its laundry listing of recent packages and massive financial stimulus, the previous couple of months had been an erratic, even awkward segment of failed forecasts, embarrassing mea culpas, increased political scrutiny and a few evidence of misplaced belief. Managing inflation is core to a crucial financial institution's assignment, and from primary players just like the U.S. Federal Reserve and the Bank of Japan to local institutions just like the Bank of Canada and the Reserve Bank of Australia, latest activities have dealt a blow to their credibility as they play catch-up with coverage and, in the system, enhance the probability of recession. They had horse blinders on. They didn't want to entertain any talk of stable or upside hazard to inflation in reaction to huge stimulus round the sector, government and financial, stated Derek Holt, head of capital markets economics at Scotiabank in Toronto. I think that they had that proof even as 2020 unfolded, but held onto emergency applications for any other year, and discounted an initial rise in inflation as transitory. The end result, over little more than every week the Fed has whipsawed economic markets with a 75 basis point hobby price increase, its first hike of that length for the reason that 1994, the European Central Bank scrambled towards new emergency plans to control authorities' bond spreads, the Swiss National Bank authorized an unexpected price hike, Bank of England forecasts hinted at a growing stagflation, and Bank of Japan Governor Haruhiko Kuroda become pressured to apologize after stinging grievance of remarks that families had turned out to be accepting of better charges. Kuroda's predicament changed into emblematic. Inflation in Japan crept simply over 2% on an annual basis in April, low in comparison to the more than 8% increases in customer charges seen recently in the United States, for instance, and effectively assembly the BOJ's 2% target after a long time of issue about the other problem of deflation. Yet the notion of households accepting better fees proved taboo, something that primary bankers and elected officials across the world are rapid relearning after a generation whilst expenses were held down through a whole lot of forces, such as globalization, that the pandemic may additionally have eroded. Every one of these significant banks is working in some sort of danger control framework, and simply since the 20,072,009 monetary crisis, the race was who turned into going to Audi's the opposite, so as to maintain boom and jobs in a low or even falling fee surroundings, said Ed Al-Husseini, a senior fees analyst with Columbia Threadneedle. Now this is entering into reverse. The risk of mistakes has shifted to the other aspect of the road, within the shape of inflation that threatens to live better and take public wage and rate expectancies with it. Blindsided critics say the imperative banks themselves are guilty for maintaining interest quotes too low for too lengthy, and printing an excessive amount of cash for the economy to soak up, specifically an economy wherein the supply of products and services suffered its personal setbacks. Central bankers argue that lots of the modern fee shock is past their control, with inflation made more excessive and continual by means of events together with the Ukraine conflict or the nevertheless uncertain go-back of China to its place inside the global goods deliver chain. Whatever the reasons, the effect has been felt acutely with the aid of households. Blindsided by means of rising food and power costs they have been told could be brief, faith has begun to erode that vital banks will hit their traditional 2% inflation goals any time quickly. A worrisome improvement it has started shaping valuable banks' personal reactions. After the Fed unveiled its large charge hike on Wednesday, Chair Jerome Powell was blunt in tying the historical movement to fears the Fed was dropping the struggle in shaping public expectancies approximately inflation. Some economists downplay such expectancies, measured in surveys of households, as being overly touchy to things like gas and meals charges, which are excluded from the center inflation traits usually given significance in setting financial coverage. But, headline inflation is what human beings enjoy, Powell stated in an information conference after the policy decision. They do not know what core is. Why might they? They haven't any cause to.